Welcome to CEO Money. I'm Michael Yorba. My guest is Richard Lazarow, CEO, Stock Analyst Guru. Richard, welcome to the show.
Thank you, Michael. It's great to be here.
All right. Tell me about yourself and Stock Analyst Guru.
Well, I'm starting Stock Analyst Guru now after, I guess, over a year of putting it together. In terms of my background, Michael, I was a stock analyst for over a decade in New York City at hedge funds and other money management firms. Long, short analyst, buying fundamentally cheap stocks and shorting overvalued stocks. After getting an MBA at NYU, I have an undergraduate degree from Wharton School of Business in Pennsylvania, at the University of Pennsylvania. So I've got 2 finance degrees and a lot of finance background. I was an LBO analyst and a real estate analyst before I got into the public markets. So I've been analyzing assets my entire life, practically. The reason I'm starting this now is this is really a skill that I developed that I really enjoy and love, but I'm actually really good at it. At the end of my career in this business, just before the financial crisis, I started really paying a lot of attention to the technicals, because I thought, well, if I really understood the charts better, it would help me a lot more with timing. I mean, you could find an idea anytime, long or short, but does that mean that that day or that week it's the right time to buy it? Sometimes the stock just, the market's emotional, Michael. So things get overvalued and undervalued all the time, and they push, much further. And so understanding what the market is saying is, because, the chart's always correct, so understanding what the chart is saying, I thought had to be really important. And after analyzing that exhaustively for over 5 years, I finally was able to really come up with something very powerful that became actually more intuitive or more powerful in managing money than the actual fundamental analysis. Because, I guess, that should I take a pause? But
no, well, let me jump in there for a second. I've been a technical analyst and cut my teeth in the futures market in 1980. So I've studied them all, whether it's Elliott Wave, it's candlesticks, a good, 10 years before Neeson wrote the book. And it was the Japanese that taught me. Gann, Fibonacci, and then my own time series analysis. And then on top of that, taking some of the things that Gann did and expanding on it through people who have been in astrology for their whole life around the globe, friends of mine in Vienna. So you're talking to a guy that actually knows what you're doing and has been doing it since 1980. So talk to me about what you've discovered, what you were bringing out to the world, because there's always something new. Somebody finds something.
Okay, so this is new,
let's
Michael.
talk about it.
So here, let's talk about that then. What's new is that what I discovered from the fundamental and the technical analyses was that the underlying core, the core of both of those analyses was to discover one thing, or actually one thing: support and resistance.
Okay.
You do fundamental research to discover, support for your buys and resistance for your sells.
Reliable
right?
support and resistance.
Well, but it's very subjective, because do you know whether the stock should be 15 times earnings, 20 times, 30 times, or 80 times? The market will tell you that. I mean, the chart's always correct. So what I also discovered in stock charts was that there's support and resistance. That's what the chart analysis is also predicated on, is finding support and resistance. You want to buy off of support and sell off of, as you're falling from resistance. And that is really what I've discovered how to do very well. So there's a way to understand whether the chart is pushing off, at any time, a stock chart is either pushing off of support, seeking resistance, falling from resistance, seeking support, or it's going sideways, kind of biding its time, waiting for more data.
Accumulation or distribution patterns.
Or it's just waiting for a news, like maybe it's earnings announcement, and there's resistance overhead, there's support underneath, and it just goes sideways. You can actually just see it happening, and the bulls might try to push it up, and they fail, and the bears might try to push it down, and they go, you know what, it's not worth it. We're just going to wait for the news, and the news will will either vault us over the resistance or make us fall under the support. And then it's, the game is on from there. So that's really what's happening in the stock market. But so combining the two, once I did this in my job at a hedge fund, when I combined the support and resistance analysis of the fundamental with the technical, I started to be unstoppable. It was really, really good. The timing was impeccable. And then we had a financial crisis, and I had to take a hard right turn into investment banking for a while. I had a family, had to leave New York because there were no jobs there. So I went into banking, and I put this on the shelf. And then, as an investment banker, I'm just basically bringing money to companies, and I was good and resourceful, but I'm more of a commodity there. I felt like, I was an agent, and as I kept feeling like I wanted to do this, but I actually started writing this 5 years ago, Michael, and there was no way to promote this that I could see. Then I started looking at it again last year, and I said, wow, there's video sales letters and Facebook advertising, Google advertising, YouTube, webinars, all this new stuff that came out. And I went, now's the time that I can bring this out to people and really help them, because what I have here is truly awesome. Like I'm not saying just good. I'm not saying just very good. I'm saying that the tenets that I have developed are awesome and guaranteed. Like I have the training there's a written guarantee that says, I would go so far as to say this is an optimal methodology, but I don't want to guarantee that because I don't want to dicker over what's optimal. But I will just say that my training shows how not to buy in downtrends. You do not average down like some guy on TV says every day on his CNBC show, or that's for people who don't understand what's going on. When you have no clue what's, when to buy, you don't buy a quarter of your position and hope it goes down and buy some more and more and more on the way down, because then you're losing money by definition. And then if you're, you don't know, you have no clue. So that's what, is suggested, and that's not correct. And if you buy a quarter of your position and it goes up, then all your stock research only resulted in a quarter of what you should have made because you were right, but yet you didn't buy enough stock. So what I do is I train people on how to buy at the right times, how to identify where the support is, where the resistance is, and I teach how to buy just as you're bouncing off of support, which is perfect, right? So if you've identified support correctly, then you buy just as the stock is pushing off of support, seeking resistance. And that is the perfect place to buy, as you are probably aware, Michael, because if you are incorrect there, then since you're right at support, when support is broken, you lose very little. But I train people, you get out because support's been broken, you're out. And if support is not broken, then the uptrend is still in effect, and then you've entered at the best possible place because the downtrend back to support has been done. You're bouncing off of support, so you're only buying in the uptrend, and you get then you see where the stock takes you as the stock continues to seek resistance.
Richard,
yes.
This show is not about talking us through the different nuances inside of the course. Just give me an overview of what they're going to get, and then let's bring it out. How the hell they reach you, so we can start the conversation with our audience that develops into something different or better with you. Are there chapters? Is it online? Is it through?
I'm sorry.
Yeah.
I was trying to really give the proof of the insight that it really works. So it's a curriculum that I sell online.
Yeah.
There's a way to get involved for free that I teach fundamental and technical analysis. So I'm bringing both skills, both methodologies to people. I have a worksheet that I developed that I actually used when I was managing money to show me free cash yields, EBITDA multiples, EPS, growth rates, pegs, book value multiples, margin, whether stocks have been meeting or beating estimates, what estimates have been going up or down for the future, et cetera. So I teach how to look at that so people will understand the value of their stocks very quickly. So that's actually free.
Is there a focus on whether it's NASDAQ, New York, penny stocks, any particular type of stocks that you're talking about?
Absolutely not. This information is applicable to every stock, every asset, every class, et cetera. It just teaches you how to understand the valuation of your stocks. And just like in the real estate market, I mean, there's no way of saying this stock is absolutely worth 13 times or 30 times earnings. You have to compare it against other stocks that are available out there. So it's a matter of accumulating knowledge about the fundamental and saying, well, this one's has this valuation, these margins, these growth rates, and it's selling for this. And then once you start to see other ones and where they're trading, you can get a sense for whether yours is relatively cheap or expensive.
Have you developed a track record off of this for the curriculum that you're going to show to people?
No, because I was working for a hedge fund at the time, so all I can do is show them. And again, this is fundamental analysis is very subjective because you're always comparing against other stocks.
Yeah, but you got to put money in the market before people believe you. Otherwise, it's paper trading. And when you're selling what you're selling, you're talking to somebody who's been doing this since 1980. It's had well over 8 different federal investment licenses in this industry. And you got to put money. You got to put your money where your mouth is. You got to put the money in the market. You got to trade it, and then they'll go, "Oh, wow, geez, it really does."
Well, Michael,
work.
see, I'm not asking for them to give me their money so I can manage it for them. That's really what you're saying is more applicable to that. Oh, I'm selling this. I'm selling information. So I'm coaching and selling. Maybe I should have started there. I thought that maybe I should go back up a little bit, Michael. I'm so sorry. I am educating. I have a curriculum that I'm selling to people on fundamental and technical analysis, and more. It's more about the art of support and resistance. So I'm teaching people how to manage their own money so that they are self-sufficient. They don't have to rely on somebody else. I'm going to empower them to really understand, okay, where do I buy? Where do I sell? Why? And it will become very apparent before they even trade a dollar.
How much are you selling
reading the
for?
course? It's the course is actually $29.97. But we're offering 1,000 since we're just launching actually this week. I'm offering $1,000 discount because it's like to founding members, and I'm also offering up to $800 additional discount for people if they just give us if they give us 5 names of their friends who are investors before they get the course. I'll give them $400 off, and if they give us 10 names, they just put it into the fields. They'll get an additional $800 off. That brings the net price down to $1,197. With that, Michael, comes the first month, a whole month of training. So every day, at the end of the day, I get on the screen on a webinar live and say, okay, folks, here's what happened in the markets today. And on screen, we'll go through, okay, here's what happened to the SPY, the Dow, the Qs, Russell, and then I go through the sectors and say, so this is what happened with the market. The market is either in uptrend, and this is why. It's in downtrend, and this is why. We're stuck in in this pattern right here like this, and here's support and resistance, and so we're going to be going sideways for a little while, and this is how you know that. It's so informative, Michael. It's very explanatory, and after a month of me explaining this every day on video, and it's videoed and archived. So if they're not available when we do this, and I will change the time every day to accommodate people with different schedules of commuting to work or whenever, et cetera. And Fridays will be on the weekend so that people will have a chance to be on live. So then I will archive the thing so that they can watch it in their spare time. In addition, all the members who have paid the full curriculum price and are now full members can send me stocks if they're not able to be on the webinar that day and say, Richard, when you're going over in the wrap up today, I would really love it if you would tell me about NVIDIA, help, go over that one with me, or, so they'll give suggestions. So I go over, that's the format, Michael, is the overall market. So, if the market is in happy mode, I say, you really need to be long here, and this is why, because the market is going up and we're over resistance, and that's going to bring up a lot of stocks, and we're in breakout mode. Richard,
I appreciate you being on the show. I've got other guests I've got to talk to, but thanks for being a guest today, Richard. I appreciate that.
I appreciate your time, Michael. It was great being with you.
Thank you. You've been watching CEO Money with Michael Yorba. Don't forget to follow us on Facebook or